All right. So this is going to be a breakdown of how to net $250,000 in 1 year as a life insurance broker. And just for reference, my name is Ty Cook. I have been in the life insurance industry with Family First Life for not quite 3 years. It'll be 3 years coming up in January. So about 2 years, 11 months. I came from the solar industry, spent about 5 years there. Top producer, manager, trainer, did all that stuff, and just need something better. At this point, almost 3 years in, I've deposited somewhere between like 1.2 to 1.5 mil over the last 3 years, with about half of that coming just this year, 2024. Um, so there's a lot to unpack there, but first things first, for everybody starting as a sales rep, as a broker, how do you net 250K in commissions in your first year? We have guys that have done it in their first year better than me, um, and so we'll break that down. But first, let's break down how the insurance company, insurance industry, I should say, works. Why is there so much money in insurance? So essentially, we all know, people who listen to this call, you have families. We all know people who have kids, husband, wife, you name it. So when a family, let's say this is Tom, is looking for life insurance, they cannot go directly to the insurance company. They have to go through a licensed broker or licensed representative. So let's say this family comes to me, which I'll explain how we find the families that we can sell to our clients. This family's looking for life insurance. They come to me. I'm the broker. My job is to match them with the best carrier for their situation and what they can qualify for, and then inform them of how the plan works and the benefits. So essentially, I am bringing this client over to the insurance company. Now, the insurance companies that we work with, Aflac, Mutual of Omaha, National Life Group, they are A-rated companies that have been around 100 plus years. And insurance companies in general, they are essentially the backbone of America. When 2008 happened, the crash, all the banks went under, they were going to the insurance companies to bail them out. So they're the most secure companies around. I think the company that's been around the longest for us that we have access to started in 1846. So almost 200 years ago, they started, and they're still in business. So these companies have been through world wars, recessions, plagues. I mean, you name it, they've been around forever. So for them, when we bring them a client, let's say this client, gets a policy with Aflac, right? And they're willing to spend $200 a month for the policy. The insurance company, their model is they're willing to pay a commission more than what the client pays up front to acquire that customer. So when I bring that customer to the client pays 200, they pay me an upfront commission, basically saying, "Hey, thanks for your business." And so they understand that in order to acquire a client, they're going to pay way more than what they're receiving back from the client, because the client's going to pay this number for the rest of their life until they pass away. So the insurance company is willing to front that cash into the form of commission to acquire clients on repeat. So these billion-dollar companies, they're shelling out commissions to brokers left and right, to bring them customers. So let's go to an example to see what that might look like, as far as compensation. So client pays $200 a month. You multiply that by 12, that equals $2,400 a year. Or in other words, we call that AP. It stands for annual premium. So the client's paying $2,400 annually as their premium for their policy. Now, my commission as the broker, if I help that family, is figured out by the annual premium times the compensation percentage, which this percentage ranges anywhere from 80 to 120%. At least within our company, that's what it is. There are other companies that really take money from the agents, and they start people at like 20, 30, 40%. So we start our agents pretty high, and we have the highest contract available because we do so much volume, nearly $1 billion a year with these insurance companies. So you take your annual premium times the percentage. Let's say in this example, annual premium 2,400, percentage is 100%. My total commission for that one policy is $2,400. Now that total commission is broken up into two different payments. So first is the advance, the 9-month advance. So client pays 200. The insurance company says, "Hey, thanks for your business. We're gonna get their money forever. We'll pay you up front." So they pay me 9 months of that 200 up front. So I get $1,800 deposited in my bank account within 1 to 7 days. So today's Saturday. I closed the deal earlier today. For about this, it was 2,500. So probably Tuesday of next week. So today's Saturday. So Monday they'll do the processing. Tuesday I'll get a commission statement, and Wednesday they'll deposit that money into my account. Now the rest of the commission comes on the back end. So it's a 3 month back end. So as long as the client keeps their policy for the full 9 months, in months 10, 11, and 12, they're going to pay me out $200 each time for a total of $600. 600 plus 1,800 equals $2,400. So that is the total compensation for one policy. There are some renewals, year after year until the client passes away that we get. However, life insurance sales is the highest upfront paying, and so the renewals are nothing crazy, nothing to call home about. 2, 3, 4, 5%, nothing crazy. Now let's talk about something important. One of the quote unquote downsides. Business is business. If I ran a Domino's, we're going to lose money on certain pizzas. Maybe someone's making a pizza and then it drops on the floor. You're going to lose money in business no matter what. In life insurance, we call that chargebacks. So essentially, chargeback takes place when the client cancels within their first 9 months. Remember, there's a 9 month advance. So if the client cancels, let's say in month 6, the carrier will claw back the difference. So let's say 6 months in, the client's been paying. 9 months minus 6 months equals 3 months where the carrier's missing their money. So 3 months times 200, I would have a negative $600 chargeback on my next commission statement. They don't take this whole advance away from you. They just take what the difference is. So minus 600, the solution. They don't take it out of the bank account. They just show up as a negative balance in your next commission statement. The solution is just sell another policy. So the next time I sell a policy, it pays me $1,800 minus the 600. It'll net me 1,200. So chargebacks are inevitable. Industry standard, industry average over the last century is about 30% of policies charged back 3 out of 10. That is really high. That is accounting for brand new agents who don't know what they're doing, fraudulent agents who are submitting bad business. Our standard is, as a new agent, you should be around 20%. And then even as a really good agent where you've been doing this a while, it'll still always be somewhere between 10 and 15%. I think mine's sitting right at about 16% right now. So hopefully that provides clarity on how we're paid. Now let's get into how to actually net $250,000 in a year. And that formula is the annual premium times your compensation percentage, and then you subtract lead cost, chargebacks, and that equals your net. Now, some people will say, hey, well, what about taxes? If you have a good tax guy, you shouldn't have to worry about paying too much in taxes. There's ways to mitigate that. Like, for example, it is December, right before the end of the year. I'm pulling the trigger on a new truck, a Raptor, because I can write that sucker off and not pay Uncle Sam taxes. So taxes, yes, it's part of this, but if you know someone, a good tax person, you shouldn't have to deal with that too bad. So lead costs. Some people say, well, do I have to buy leads? The options are either buy leads or find clients, right? So me personally, I never wanted to bug family and friends. I didn't want to knock doors anymore. I already did that for solar. I didn't want to wonder where my next client was coming from. So most of us in the industry will just buy leads. And so you essentially can purchase a lead of someone who is actively looking for your product. And then it just comes down to getting a hold of that person and then selling them. So leads is the way to go. I wouldn't be doing this if I didn't have the ability to buy a bunch of leads, high intent leads. For us, our leads are all in-house, and it's a faucet for us, so we can crank it up and down depending on what your goals are. So annual premium times percentage minus lead cost minus chargebacks equal your net. And then just for reference, the comp rates within our company, the goal to increase comp is you have to hit your annual premium target 2 months in a row. So starting commission, we start everybody at 80%. And then if you do 10K AP back-to-back months, 90%. which you can basically like walk into the office and do this number. This is really not hard. 20,000 back-to-back months gets you to 100% commission, and then 30,000 gets you to 110. 40,000 back-to-back month, you max out the producer contract at 120%. The goal, and what I think helped me a lot, is you can become more profitable by getting to the 120% mark as soon as possible. Basically, overspending on leads to essentially buy your comp. And then now that 20% extra bump, that 40% extra bump, you're making way more money on each policy. So going back up to this example, 2,400 times 100%, you're making 2,400 in commission. If this was 120, that 2,400 would be closer to 3,200 or about $3,000, right? So here's an example. Let's say, your first year, you're working hard, you start here, and then you can bump to 90 and 100 rather quickly. And then to be on track, if you're just buying leads and doing your job and you're somewhat of a hard worker, you can do 30 and 40 in a month, no problem. So let's just say, maybe you don't max out the contract right away, although that's the goal. Let's just say throughout the year, your average, you get to about 110%. And maybe you do get to the 120, but you take into account the 80, 90, 100 that you started with. Your average for the year is 110%. So in order to net over 250, you need to sell 400,000 annual premium in a year, just to be safe. You can squeeze by with less, but like, why do that? Let's just crank it, right? So 400,000 annual premium, you would multiply that by your compensation rate. Let's just assume it's not a 120, it's a 110. So with that math equates to about 440,000 in commission that would be paid out from the insurance company. Now, in order to crank this production, the guys that are in my office within the first year, they're all spending at least 6,000 a month on leads in order to hit these targets. The more you spend, the more you make. But let's say 6,000 a month, you can certainly hit these numbers. That's 72,000 a year. We'll say about 20% charge back. Sure, you can be really good and get this number lower, but let's be conservative here. So 20% charge back, 80,000. So what was paid out to you, 440,000. Your lead cost was about 72,000 for the year, minus another 80,000 for chargebacks. There's your 288. You're going to have other expenses, nothing crazy, but your standard business expenses. But of course, the cool thing is you can write everything off. So the $100 a month CRM, $1,200 a year. You may pay, I guess, your cell phone bill, which you already have. You can write that off. Car stuff, you can write that off. So a lot of write-offs, but this is the formula and this is the target. This is the target to guarantee essentially that you're netting over 250K a year. Now, how do we do that? Last thing I'll go over. Obviously, it sounds cool. No one hits those numbers without hard work. And there's really three things that need to be in line. Leads times activity times skill equals those results. So as far as leads go, you have to be spending $1,500 to $2,000 a week on leads. They have to be high quality and they have to be tied to a CRM with all the automation. So for example, me personally, I don't really dial anymore. I'm not calling clients. What I've done is I spend enough on leads and have the right automations to where when the clients fill out their lead form, it goes to a calendar and they book appointments with me all day long. So all I'm doing is just running pre-booked appointments. The key though, before getting to that point, just make sure you're spending the right amount on leads. It's the analogy I always give with leads because some people are like, oh well, I want to just spend $500 a week on leads. The analogy I give is, if I was in a 3-point competition with Steph Curry, I'm 5'11", white dude. All I can do is shoot threes, but I'm not even that good. Steph Curry, greatest 3-point shooter of all time. If I was in a competition against him and he got 10 shots and I got 100 shots, I would win that competition all day long because I had more at bats. So it's much more risky to underspend on leads than it is to overspend. So 1,500, 2,000 a week, that'll pretty much guarantee if you're doing the work, will get you to that 400K annual premium mark. Now, with your activity, so this is the day-to-day, you're shooting for 5 to 8 presentations a day. 5 to 8 presentations is you presenting numbers, going over the options with clients. Now, out of those 5 to 8 presentations, you're gonna close at least two of them, if not more. Obviously, there's days I've closed, three, four, five policies. There's guys that have closed. I think the record in our office this year was like 7 or 8 policies in a day. So you can go better than this, but we're talking bare minimum numbers: 5 to 8 presentations a day, two plus sales. Now, there's certain days where you're gonna have to dial, and so our metric is 300 plus dials a day. If you do all this activity every day, you can't miss. It's all based on activity. Now, the schedule for that, bare minimum, Monday through Friday, 8 to 6. That's the goal. I'm sure you could take a break here and there in between, but it's 8 to 6, Monday through Friday. And then Saturdays, a lot of the top producers in our office, they'll work a half day. I'm here on a Saturday, 8 to 12, knock out a few calls, try to snag a deal or two, and then be done for the week. All the guys and gals that are producing at a really high level, they run this schedule at least for their first year. Past your first year, you have this thing mastered. You can dial it back if you want to, but there's some other parts of the business where you can scale this thing massively, which we can talk about in another video. But this is the bare minimum activity, which is the most important piece of this that needs to take place. And then the last part is the skill. So the skill set part here, follow a script. We have that. Go over the script constantly, memorize it, don't deviate from it, and you'll be successful. And then we do daily trainings with our team every day. 8 a.m. script training, 1 p.m. objection training every single day. So being plugged in and trained every day is super important. So hope this helps. Hopefully this gives insight to how to be successful in life insurance as a broker. This of course is within our organization, with our company. We've come a long way. We figured a lot out. We've made all the mistakes, and so we have a pretty well-oiled system at this point. And of course, we're always looking for like-minded individuals who want to work hard, make more money than they ever have in another industry. So if that's you, if you feel like you're willing to put in these hours, put in the work to get those results, then of course we'd love to talk to you, reach out.